Man, oh my goodness, what a week. What a freaking week. So the outlook for this week and the review for this week is something crazy. So the week of July 29th through August 2nd, right? We're wrapping up the week. Market's going to close here in about 5 minutes, and it was just overall a very informative, very rewarding, very very pleasing week of trading, I should say. I missed some moves. I caught some moves. I missed the overall move that I wanted to catch, but that's okay. Just going to account for it you know, going into the next weeks of trading, making sure that I'm setting aside actual time to place my entries or catering it, or I'm sorry, or aligning my schedule with work, enabling me to trade, right? Probably said that wrong, but whatever. Anyway, let's get into the outlook and then let's get into the review here. So the outlook on the chart for YM1, which is Dow Jones, I was looking for sell-offs. If you watch the outlook video, I was screaming for sells. I'm like, no, price is way too high. This doesn't make sense. I don't know why we continue to climb. These markets are overvalued. Blah 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 blah. The indices, like, they should be dropping. There's no reason for price to continue flying. But then taking into account, yeah, so on the socioeconomic side, it's an election year. Obviously, you want to keep the people, give them something to be, comfortable with, right? So if the markets are going up, that means good, right? We're doing good in the economy. But in reality, nah, these markets should not be this high at all. They're just being propped up. The interest rate talk, leaving. What are we going to do with the interest rates in America? Are we going to cut interest rates? Are we going to raise interest rates? And then every single time interest rate talk comes out or news comes out, it's always, no, we're not doing anything with interest rates. So yeah, whatever. This was my analysis for the Dow Jones for YM futures. I was looking for sells at 50% of this inefficient pricing here, but ultimately, and ultimately looking for targeting that low at 40.053. And yeah, so initially on, I think it was Monday or Tuesday, I took a sell off of that 50%, but immediately I got a little bit of a reaction, but then price went straight through it and it went a little bit higher. And the reason being is because off of this right here, inside of this range, we're now on the 4 hour once again, marked up with that line there. Price really wanted to come mitigate something inside of that 4 hour candle. Now, I've done it again. I completely forgot to refine my setup. Like, I looked at the 4 hour and I was like, wait a minute, that's a sponsored candle, or that's a point of interest that I should be looking at. I should be zooming in on that area. Like, I should have marked out both the inefficient pricing and the sponsored candle and then assessed which one and trying to pinpoint exactly where price was going to go inside of each. And if I had done that, I would have been able to catch the first move here, which is that new black line. And then the second move, I'm kind of upset because I missed that move when I was doing some inventory at work. And like, I literally watched it tap the 1 minute SC, but I was doing some other things, and then price tapped it perfectly, like perfectly. And as you can see the result, we cleared with ease the target that I was aiming for. I'm expecting price to continue to go lower, but that's for the outlook. Whatever, we'll assess that later. But yeah, so that was that play. And let's go ahead and get into the next one on NQ. I wasn't really watching NQ charts, but I did mark up the range because I was looking for a play on it as well. And I missed this exact play the same time I missed the YM play, right? So I was looking at NQ on the 4 hour, saw this range. I think it was Wednesday. Yeah, Wednesday. And price created the range. We had a continuation breaker structure that solidified the range, right? Price went up, mitigated something inside of the premium side of the range. But ultimately, I ended up seeing a 5 minute sponsored candle, and I was going to enter off of that. But like I said, I was busy doing something else, and I should have set a limit. It's not an excuse. I should have set a limit because I always set limits. I don't know why I didn't do it in this particular case. And then price ultimately as you can see the result, continue dropping, right? So I'm glad to see right now that the markets are dropping. They're extremely overvalued. But let's go ahead and go over to TradingView and check out what exactly I was looking at on these charts when I was looking to execute, but missed, right? So on this chart, so this is NQ, and the 5-minute sponsored candle in question, which was clear as day, was right here. Mitigated. The reason why I looked at this candle, mitigated price, right? Mitigated liquidity there. Very huge liquidity void, inefficient pricing created, cleared structural low, scalp structure low, and it ended up dropping. Price tried to come back up, creating relatively equal highs here, dropped one more time. So obviously, this is my point of interest. This is where I'd want to enter. And target, as I always do, is target the swing lows, swing highs, right? So the higher time frame lows and highs to maximize risk to reward. And then price came back, tapped it perfectly, and I missed it. And it dropped and cleared the range with ease. And I think this was over 1,000 points, if I'm not mistaken. Like from that entry. Yeah, just to the range low alone was 948 points, and it actually went for around 1,200, almost 1,300 points. Insane. But it was analyzed. Can't say I wasn't. I'm not surprised. I can't say I am surprised. I definitely marked it up. Definitely called the target according to my analysis, and definitely have been watching it for weeks, noting that price should be dropping, and prime opportunity to catch that trade, and I missed it. So a little disappointing, but whatever. Catch the next one, right? The markets are moving. I'm still alive. I'll continue trading. Then on the YM, right? So what ended up actually happening on YM, so let's look over here in this area. So I had marked up the 50% of inefficient pricing from this wick to that wick, but like I said, gave a reaction and then went higher. And so if I would have done a little bit of refining, I would have seen this 1 hour point of interest, which is what price came to mitigate, the open, and the real inefficient pricing, if I wanted to mark it up, would have been from this wick down to that wick upon the refinement. And if I had gone down to, let's say, the 30-minute time frame, could have gotten a little bit more precise with that inefficient pricing, and I could have said it was here, but because there's two inefficient pricings here, I would yield to the 1 hour point of interest rather than looking at the 30-minute, only because that creates a dual or a buy, what's it called, a buy scenario, basically. Well, that's not the word for it. A binary scenario, right, where I'm choosing either this one or that one. I mean, I could wait for the reaction of both, but I'd rather, like I said, I'm trying to stick to my guns here and pinpointing exactly where price is going to go and playing accordingly, right? So just getting back to that. So price ended up actually mitigating the 1 hour point of interest here. The open, inefficient pricing filled in, tapped, gave reaction, dropped lower, right? So once price gave this reaction, what I did, went down to the 15-minute time frame, right, and see, okay, what scalp structure was broken. Here we have this high that broke this low, and then we ultimately went lower here, so we created a range, 15-minute range after the reaction from the 1 hour point of interest here. And ultimately, what do I do? I look into premium to see where the opportunity lies, obviously knowing that we're inside of the premium of the overall range, and now we're inside the premium of the internal range based off the reaction from a premium point of interest. So that's where I would want to enter in off of, in the internal range of the premium point of interest, off of a point of interest inside of that. Right, tongue twister, whatever. But ultimately, looked for it, and I ended up seeing inside of the point of interest what caused this large run downward. And all of this up here seems to be pretty accounted for. Pricing seems pretty equal, right? So we run this low here. This looks pretty equal. That looks pretty equal. We got a drop here. And then because this is the really like the immediate scalp structure that holds up this leg here, this is the leg that I wanted to see broken. And this little price run here did not break that low. So all of this, if I'm looking for points of interest inside here, to me is automatically invalidated. And so what I ultimately looked for and saw was this sponsor candle, 1 minute sponsor candle here, that mitigated a little bit of liquidity. Is probably something inside of this candle here on the second time frame, and caused an immediate break of that structure. And once again, you see that price tried to come back up and mitigate the sponsor candle and inefficient pricing, but left relatively equal highs. So where's my point of interest? Where do I want to enter off of? Would have been that 1 minute sponsor candle. And as you can see, price tapped it perfectly. Like, can't get better than that. Can't get more precise than that. Spread's not an issue on futures. If you're not trading futures, I highly recommend it. And just ultimately tapped it. And then let's see, price dropped over 1,000 pips. Yep. Dropped over 1,000 pips. Go to the bottom of the range. Alone, just to the bottom of the range was 1,200, or almost, 1,250 pips, 1,250 pips. And then where price just closed, 1,500 pips. And that was over the past 2 days, or 2 to 3 days, right? Over this entire week. And like I said, ultimately, still in the framework of the outlook, called the target, was slightly off on the point of interest, which is fine because I moved my stop loss to break even when when I entered in off the 50% of the inefficient pricing, right? And then ultimately watch the reanalyzed, watch the reaction from the higher time frame point of interest, saw the play, missed the play, and then just caught sells down the way, right? So just because I missed the play doesn't mean I'm completely out of it. There definitely were opportunities that I caught as price drove lower. Despite being in discount, the momentum was way too strong, and knowing where the target was going to be, I decided to catch trades as we dropped lower, and I basically caught scalps as we aimed for this target, just in case, because we're in the discount. I didn't want to risk way too much because there was a possibility that price could retrace back into the premium of this range still, and then we get some bouncing around and then drop, or it could have possibly gone here. But judging based off the analysis, obviously I wanted to hit this target to the low there, right? So yeah, overall it was a very informative week of trading. Definitely adding Dow Jones to the watch list, keeping it on the watch list, analyzing it, same as NQ. Never going to stop trading NQ. Going to be a little bit more focused on choosing my interests and going through the mechanical structure of my trading strategy, right? And making sure that I'm hitting everything accordingly, and start increasing this win rate and start increasing the precision and the profitability factor of my trades. So yeah, shout out to Onk T in the RCV chat. He actually did catch this trade, and I believe it was from around this area, but he wasn't trading futures. He was trading just, regular CFDs, Forex CFDs or whatever, or index CFDs, and he caught it around this area, which the pricing is irrelevant, or the index point is irrelevant, but he caught it around here on the 4-hour time frame when I looked at it, and he caught the entire move. So yeah, I'm so happy to see that. I love RCV. Yeah, so next week, gonna catch some more trades, make some more money, live life. See you guys next week in the Outlook. Peace.